Hey everyone, if you're in Europe and still on the fence about investing in the US stock market, this is your wake-up call. In the next few minutes, I'll break down exactly why right now might be the best time in years to get started. Let's go. Reason 1. The euro is strong. The euro has recovered from its 2022 lows and is trading at a solid level against the US dollar. What does that mean for you? You're essentially getting US stocks at a discount. You're buying more American assets for fewer euros. If the dollar weakens further, your future returns could get a boost from currency gains on top of market returns. Reason 2. The US market is climbing, but still has room to grow. The S&P 500 and NASDAQ are hitting new highs, but this isn't a bubble. We're seeing real growth driven by AI, tech innovation, and strong earnings. Yet many high-quality companies are still undervalued or recovering from recent downturns. You don't have to catch the absolute bottom. Just being early in a long-term trend is enough. Reason 3. The macro tide is turning. US inflation is cooling. The Federal Reserve is expected to start cutting interest rates soon. Lower rates typically lead to higher stock prices, especially in growth sectors. Getting in before the rate cuts means you're positioning yourself ahead of the curve. Let's face it, US markets have outperformed Europe for over a decade. The biggest and most innovative companies in the world, Apple, Nvidia, Tesla, Microsoft, they're all in the US. The US market is more dynamic, more tech-heavy, and more resilient in downturns. Investing globally means putting your money where the best growth is, and that's still the US. And here's the good news. It's never been easier for Europeans to invest in US stocks. With platforms like Trade Republic, DeGiro, or Interactive Brokers, you can buy fractional shares, ETFs, and even automate your investments. You don't need thousands of euros. You can literally start with 10 or 20 bucks a month. Another bonus? Investing in the US adds diversification to your European portfolio. It's also a potential hedge against local economic risks, whether that's political instability, slower EU growth, or currency weakness in the future. Having exposure to the US gives your portfolio more balance and more upside. To sum it up, the euro is strong, US markets are growing, the rate environment is shifting, access is easier than ever, and the long-term upside is huge. Don't wait for the perfect time. Time in the market always beats timing the market. If you're in Europe and serious about building wealth, the US stock market deserves a place in your portfolio. Thanks for watching. Like and subscribe if you found this helpful. See you in the next one.